Reinsurers in recent years have faced challenges in meeting their cost of capital, testing investors' risk appetites. Here to discuss how companies fared in 2022 as part of AM Best's annual look at the global reinsurance industry is Sridhar Manyem, Director, and Helen Andersen, Industry Analyst, both of AM Best industry research and analytical area. And Helen, how did reinsurers do in 2022, either meeting or exceeding their cost of capital?
Reinsurers struggled to meet their cost of capital in 2022. Actually, for the third year in a row, many reinsurers failed. High cat losses, rising interest rates, and economic uncertainty all made meeting cost of capital a real challenge.
Sridhar, in what way does not meeting the cost of capital hamper a reinsurer?
Yeah, that's a good question, John. So, when investors are trying to allocate capital to an industry in general, they are looking at companies that meet or exceed the cost of capital in a consistent fashion. So, when a reinsurer wants to raise capital, and reinsurance being a capital intensive business, it's very important that reinsurers are able to access these capital markets. Meeting or exceeding the cost of capital gives them a more financial flexibility to raise capital during times of need. And from an AM Best perspective, an insurer's ability to raise capital, especially in times of stress, is one of the key factors when we look at when we evaluate balance sheet strength and financial flexibility and so on and so forth. And when we are looking at operating performance, we look at return on equity as one of the metrics. We not only look at return on equity vis-a-vis peers, right, peer comparisons, we also look at the return on equity in comparison to cost of capital as one of the factors in assessing the operating performance. And of course, there are other factors that we look at, other metrics we look at when we assess operating performance, like return on revenue, combined ratio, so on and so forth. But ROE also plays a part.
How can reinsurers mitigate these issues so as to be able to meet expectations?
Well, many of these risks are out of the control of these reinsurers, but what they can control are their responses to the risks. So, effective risk management programs that are responsive to market conditions are really key, because these programs can give these reinsurers the agility necessary to take advantage of good market conditions and the foresight to walk away from the bad.
Sridhar, do you think reinsurers can turn the situation around? Yeah, John, good question. I think, as Helen said, the last, I would say, 4 to 5 years have been very choppy. Most of those 4 to 5 years, reinsurers have not met their cost of capital expectations as an industry. However, if you look a little bit way back, 2012 to 2016, around that particular 5-year time frame, we find that reinsurers have exceeded their cost of capital. And that's what happens in a high volatile business. Like Helen said, reinsurers are in the business of taking volatility risk. And volatility essentially implies that there are going to be years when there's going to be huge losses and the returns are not going to meet the cost of capital. And there are going to be years when there's no cat losses. And sometimes even like the period between 2012 to 2017, interest rates were very low. The cost of capital also came down, so it proved really good, beneficial for reinsurers, and they exceeded the cost of capital consistently. Last few years, interest rates are increasing, cat losses are increasing, so the cost of capital increases, the returns come down, and reinsurers are struggling to meet their expectations. Can they turn this around? I think over the past 3 years, reinsurers have been on a journey of price discovery, and the pricing momentum is definitely is a tailwind for reinsurance companies, and the terms and conditions have not really loosened. So the terms and conditions, in fact, have become much more tighter. The pricing has improved, and we definitely feel, absent major cat losses and other unforeseen events, reinsurers can probably meet their cost of capital in the medium term.
Thanks, Sridhar. Helen?
Thank you, John, for your time.
Thanks, John.
That was Sridhar Manyem, Director, and Helen Andersen, Industry Analyst, both of AM Best Industry Research and Analytics area. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.